Very good afternoon to all of you. Welcome to our virtual LearnXNetwork session. It's our series, as you know. So some of you have participated in some of our series before. Welcome back. And those who are new, I'll introduce ourselves shortly. So at this moment, I'm going to launch a poll. Just hope you could share what's your current job status. All right, please poll accordingly. Okay, I'm sure the questions are popping in your screen right now. So you're able to vote, okay? Let's, give us an idea, your current status. Okay, most of you are business owners, and then followed by employed, and then one freelancer and unemployed. Okay, fantastic. All right. Okay, thank you so much for the results. I'm just going to provide you another poll, okay? Okay, I'm gonna end this poll. I'm gonna share these results with you guys. Okay, so most of you, there will be more people coming in shortly, I guess. So this is current. Okay, next poll. Okay, next poll will be what are some of your financial goals or challenges. So it's a multiple choice, so you can select more than one option. Okay. So we've got a few options: high business costs, business require investors, lack of cash flow, like sales, like financial skills, like job, COVID-19 causing a decline in business. Okay. Okay, all of you have polled. Okay. Gonna share the results. So most of you would mention COVID-19 causing a decline in business, followed by lack of sales, lack of cash flow. All right. Okay. Thank you for your sharing. Okay. All right. So this eases, the discussion later. And okay, I'm going to stop the share results. We'll head into our session right now. And in between, if you guys have any questions, feel free to type in your questions. Okay, and you could also type in the chat box as well. Okay, so all right, it's 12:07. Okay, thank you so much for attending today's session. Today's topic is on optimizing profits through capital management strategies. And I hope all of you could key in the chat, your name, company, or trade, what you hope to get out of today's session, or if there's anyone in particular you'd like to connect with. Okay, so type in the chat box so that we know exactly who you are. Okay, yes, we're on Facebook live. We're streaming this. Yep. Okay. Okay, so let's proceed. Okay, we have with us today our guest speaker, and her name is Gail Shan. She's a CFO and fellow chartered accountant. She's a business-oriented financial leader with over 15 years of experience, ranging from doing corporate sales in the IT industry to successfully implementing SAP ERP application as a certified accountant in a listed company in the oil and gas industry, to managing day-to-day operations in a venture capital startup. So Gail has gained the ability to understand the opportunities offered by technologies as well as the challenges faced in implementing these same technologies in business. It is her goal as someone who stands in the unique intersection of these two domains to bridge the gap and guide those in the financial and accounting industries in the use of technologies to improve their efficiency, heighten their decision-making abilities, and broaden their business horizons, all the while remaining empathetic to the struggles they face as she walked their path before. Okay, let's welcome Gail. Let's put our hands together, a virtual clap to Gail. Thanks for joining us today. Again, a little bit about me. I'm the founder of Hashtaqs and HR Entrepreneur. Could look me up on LinkedIn. So basically a little bit of background. I came from the life sciences industry and I moved into media after with a double major in psychology and marketing. And I dealt with several industry sectors during my tenure. And right now we are actually into the transformation business. So I'll share a little bit more insights about Hashtaqs. So we harness transformation in a few key areas in internationalization, branding and marketing advisory and implementation, online and offline as well. So we do help SMEs, SME clients in EDG projects also. Yeah. And the purpose of this LearnXNetwork session really essentially is to educate the business community in functional business strategy. So as you know that, every 2 weeks we hold these to educate the community, and we want to create this community of industry leaders and business owners to network and potentially forge partnerships, and to inspire the community through learning from successful businesses as well through our summits, where we invite esteemed speakers from various sectors. So some of our past work and events, we have done a virtual summit before where we had speakers from all across the world, from US to Turkey to Russia and many others. And this was before COVID, of course, where we had our monthly LearnXNetwork sessions and our annual summits, in which we bring in successful brands to share with us some of their business strategies and tips for businesses to scale or to transform. And we are also in Singapore and Malaysia. We're quite regionally, we're quite focused regionally. So we do have we connect the ecosystem of the government, investors, and entrepreneurs together as well. And master classes that we've conducted before, and yeah, more people in our list. All right, so unfortunately this year we are unable to do live events anymore. So what's upcoming would be a virtual Asia Summit. So the whole purpose is to harness transformation, to share insights on how to harness transformation during adversity for SMEs through holistic development. Okay, so that's happening on the 17th and 18th of June. In case you have not registered, do register at the link you see here below. And who's going to be there? Very interesting people like the co-founders, C-suites from the likes of Faith, V Resorts, Golden Gate Ventures, Wanderlust & Co., One Esports, Yankee Logistics, PCOM, Malaysia, Team Flash, Bloom This, SME Corp, Droppy, and many others. Okay, so we look forward to seeing you there. It's not just going to be a one-way learning session. We'll end off with a cocktail networking as well, where you will get to speed network. Every 5 minutes, you will get to meet someone new. Okay, so let's move on to our course outline of today. Okay, so Gail will be sharing some of these key areas and the 3 business principles, how to manage your resources and what can you do, and some case studies for you as well. And after which we'll move on to our fireside chat with her and followed by a Q&A session. All right, okay, let's have Gail. All right, Gail, welcome to the show.
Hi. Good afternoon. Yes, good afternoon, anyone, and good afternoon, Rainy, for introductions. Yeah. Today, just now, like from the post, we know the COVID section is really affect all of us, and then the major two things we're talking about is a lack of the problem we're facing is a lack of cash flow and also lack of sales. So today, because I'm going to talk things we talk about the capital management. So I'm going to talk about how you can manage your cash flows. Okay. So yeah. So when we just now mentioned about the outline the three things, when we getting a tougher, when we face the crisis in this COVID-19, we always it's good to come back to the fundamentals. We look at what is the basic when we're running a business and how can we utilize the resources in our hand, then we can create the more positive cash flow and to ready for the future. Okay, so the first we talk about the basic business principles. Next, yes. So the three things we need to talk is by okay, wait, I need to see this. Yeah, is the give me a minute. Sorry. Yeah, buy low, sell high, collect fast and pay slow. You accumulate the good quality of asset. It's very simple, very fundamental. And you can say, oh, all these are so obvious, right? Why you talk about this today? But what I can tell you, based on my years of experience with the different business owners and the business size of the organizations along the so many years, all these fundamentals, when you're in practice, it's not so simple. Okay, so now we look at this. How can we utilize our basic, the resources in our hands to improve our cash flows, to generate more business? So sorry. When we look at the asset, basically we have a 4 types of assets. We have cash, receivable, inventory, and a long-term asset. So the cash, if we have in our bank account, is a good, right? It's a good thing. And those look at long-term asset, if like office building and the machine, is these all the assets for us to generate the future business. The only things we can do now to improve our cash flow positions is the receivables and the inventories. Yeah, next. So how can we stretching our asset to generate more cash flows? We're looking at the receivables. The receivables, when we're looking, we have a aging report normally in the business. The aging report will show us the number of the days outstanding of the debts. So when, based on statistics, if your debt's more than 90 days, you only have a 70% of the chance to collect it. If more than 6 months, then it's a 50%. If more than 1 year, it's almost 20% chance to cut, equivalent to no. So as business owner, if you today, you see I have a cash flow problems, the only thing you can go to is quickly collect back the money. Then you're telling me, oh, some of my customers got problems. But in this case, whoever to get the money first, they got a higher chance. Then we're looking at the inventory. This is also current asset in our warehouse, in our shop. So how now at this time, we are not looking at how much money you can get from here. I mean the profit we earned. Our main objective is surviving. So surviving is to sell at discount, whatever price your customer willing to pay. Your objective is just get back to cash because the system and the economic climate environment are getting worse. So the only thing is for you to survive in the special period of time is to collect back the cash as fast as possible and to clear your stock as fast as possible. All right. Yeah, next. Yes, next. Yeah. Okay. So liability can be a bad thing, but liability also a form of for you to raise funds. First we look at a deposit. Deposits is those customers they pay you, but you haven't fulfilled their requirement, or maybe haven't delivered the goods to them yet. Right? Then the other one is the payables. The payables is the money you owe to your supplier, or your money owed to your service providers. The loans, if you have borrow money from the bank, definitely you have a loan. And the equity is the money you get back from your shareholders. So we're looking at how can we raise, or maybe increase some fund from our supplier or from our service providers, even our shareholders. Yeah, next. Managing our liability is the payables. Here I say slow down payment. Slow down payment doesn't mean you're not paid. If you don't pay your suppliers, you end up with a lawsuit, right? So we need to renegotiate the terms with your suppliers if you are in a very difficult situation. And same thing apply to your landlord if you rent the office from them, and even your employees. Yes, do government have some grants for us to the landlord to to give a discount on the rentals, and for the job schemes to share the salaries of your the part of salaries to employees. But when times getting worse, and when your sales is getting declined and your customers not return to your business, it's always good to negotiate with your employees, let them to stay with you and grow the business in the future. And if we are in the very bad situation now, we can always turn to our shareholders. We can offer them better rate than the market rate to share your profit, your future profit with them, to raise some fund, just to tell them we need to stand together and to survive and for future growth. Yeah. So when we look at this, then we see how, if all these things, the resources, we really fully deployed, then what can we do for our future? Yeah, next. So we are preparing for future. When we're preparing for future, we're looking at three things: our customer, our cost structure, and our organizational structures. So the first, we're looking at the customers. You can rank your customers by number of profit they contribute to the company. You review their financial situations and their payment histories. You compare the last 3 months with the last maybe 6 months. So what kind of payment pattern did be changed? And especially for those customers, they're in the industries be affected by the COVID-19 badly, you really need to watch them closely. And at the same time, you need to identify very important customers which they can survive and they can grow in the future. You talk to them, you ask them whether you can help them, to stand with them together, and you can, through this crisis, you take this opportunity to build a very, very good relationship with them. And yeah, next. So we also can looking at the cost structures. The cost structures, first we're looking at those business unit or the product which they are making loss. So the only thing is for you to do that is to cut off. Sometimes it's very difficult for business owners to say, oh, I'll be putting so much effort. I build up this business and design this product, and now I cannot do it. I need to cut off. But the problem is, if you don't cut off now, they will eaten up your profit, your cash flow. So this is thing you really need to look into. And second thing is we're looking at whether you can lower your fixed cost. Fixed cost is whether your business your customer will buy from you, you'll see to incur the kind of cost. So what you can do is you can always negotiate with the suppliers, see whether you can shorten the contract and then make it more variable. Now, what last time the Fabian said, you can always engage consultants and do the profit sharing or maybe revenue sharing models. So you can lower down your fixed costs. And also you examine all your business activities. For those activities, they incur your high costs, but they bring in very low values. You can always consider to outsource them, right? The only challenge when you outsource is you have to know how to manage them. Yeah. So last but not least, we're looking at how can we optimize organizational structures. You identify who are your key employees, which they are capable managers. You dedicate your power to them. You let them to in charge of profit and loss because they are the frontline staff. They know what exactly the market they want. So you can turn the managers into your business partners. You get your business more robust. Yeah. So we the next one. So just now I talked all these things is working capital. You know, it's a simple but not easy to implement. I'm going to show one case as American warehouse players in the supermarket industries. They earn a very, very low margins, but how can they generate higher than the market above market the return on equities for their shareholders? Okay, so this is the I guess all of you knows about what is this Costco, right? So they are basically this is the wholesale corporations is American company. They are the warehouse business to serve their member only customers. Yeah. So next. Next. Yes. So Costco, they are facing this problem is they earning a very, very low margins. You see, they can only earn less than 3% margin. If you are the manager in this industry, you're facing a competition, right? Your sales, your competitors always sell maybe want to lower than what you want to sell to them. But how can you overcome this? Well, when Costco, they only do what kind of thing they're doing enable to can generate such a high return on equities. 23% is very, very high, right? So let's see how do they implement the very simple things to improve their cash flows, to bring in more money. Okay, so that is called very, very effective or efficient inventory management systems. Costco has a very good inventory management system. So they by manage their inventory efficiently, they can generate the turnovers more than 11 times. So what does it mean? It means every $1 you invest in these companies, right? They can turn around 11 times to generate a higher return on equities. So this way the utilize of the money is very efficient. For those they not understand what is the inventory turnover rate, it means if you that certain period of time is your financial years, 1 year, the total money you spend to acquire the goods for you to generate the revenues and it versus the average inventory keep in your warehouse. That is your inventory turnover rate. We call ratio. So here is annual turnover ratio is 11%. It's very effective to generate to make your money work very efficiently. Yeah. So as a business, next chart, when you identify one thing, do it to the best, to the extreme, you can create a very, very powerful impact on your business. So even with lower selling price, you can attract more customers to loyal to your business. And with that group of loyal customers, you can generate higher turnover rate. Turnover in the means is higher turnover ratio for like Costco's is inventory turnover rate. So they'll make money work harder for you. So just remember is simple things doesn't mean easy. But if we do it properly and doing to the best can make our stand out. Okay, so this is I end of my presentations. If you have any questions, feel free to ask me. So I know people want to say, how can I manage my capitals? How can I raise funds? All these questions you can ask me. Yeah, thank you.
Okay, all right. Thank you so much, Gail, for your sharing of some, insights in this area. Okay, so I do have some questions. I'm sure the attendees also do have some questions. So attendees, feel free to type in your questions in the chat or the Q&A. So, I'm going to start with a question, which is, what will be your advice to business owners, right? What should they do on day one of their business in terms of capital management? Should they have all these things planned out for them, how they want to scale the business right at the beginning, or, what is your advice to them?
Okay, as a start business, if you say we can plan capital management, actually it's quite too demanding to the business owners, right? So when we just start the business, the only things that we do is how can we raise funds. So normally we raise funds from our family members or something, yeah, to make sure my normally how to start is the business idea. So you use this very your friend's money to convert that idea to some product. Then future you can raise fund, right? So in the beginning of the things, we talk about the business is only to how you raise fund from maybe you can ready for if you are a technology products, then you can raise fund from the VC or angel investors. But if you are traditional one, then you can only relate on your friends, because in the bank only for you have when your business have some track record, then you can raise fund from that. But if you say how can I make my money to work faster, that's just not what I say. First two things. First, you must know acquire good quality of the customers, which only you sell to customers they can pay you. And second things, you make sure whatever you purchase the goods coming, you need to sell faster. Yeah. So this is we say is just what I mentioned, that is how you manage your customer and how you manage your supplier. Yeah.
And at the end of the day, it's still sales, right? Yeah.
Yeah, it's a sales driven. Yes.
What are the various capital management strategies or models that you think startups or SMEs can adopt to stay afloat long term, to be very sustainable in business? Really, is it about sourcing for funding all the time? Like a typical startup, right at the beginning, they are already looking for funding, and then they go through so many series. And for traditional SMEs, they don't really do that, right? So, what would be some of the models that you could share with us that you think could help businesses be more sustainable?
Okay, for business depends like which industry you're coming from. But for me, I spent my last 15 to 17 years is all the while in the technology, in the manufacturing industry. So I will see a lot of startup companies. If you see, if in a startup companies you want to with a technology backup, yes, your all the while is actually for CEO, part of the CEO job. Or maybe you say part of founder's job is do fundraising. It almost like every 2 years, you need to do the fundraising because you need to cater for the next stage of the business growth. Okay. But if you run your traditional business, you always need to looking at your cash flow. Your generate profit is your key. So how you generate, like just now I give example for the Costco's. Costco's, even they have even certain industry, we are very competitive, right? So if when you sell the product, we don't have you can't, especially when you're very initial stage, you're not build up your credential of your products. You spend the time still on building your branding, right? You still do the branding for the products. So how you differentiate yourself? At the same time, also you do the business. It means you have to know how to manage your working capitals. So why today I say that is we all remember buy low, sell high, and always you collect money faster than your pay money, right? So this is all the businessmen you must remember on that. So I just want to share with you one thing is I know certain construction industries, yeah, they have very how should I say that? It's very difficult for them to manage their cash flows. But sometimes the business owner, they would do, what do? Is their bid is lower because the market is very, very competitive. So they try to say, oh, I have so many people because my fixed cost is very high. I need to get the cash to come in to fund to pay my staff, right? So that's why they always bid the price is lower than the market price. Then hopefully they can generate some profit through the various order. But the thing is if you're lower, then your cash flow is forever in a negative positions. You're forever is working for the bank or working for somebody's because you don't have enough money to cover your costs. So that's why the cost structures is very important. When the business traditional industry, you don't spend too much money on your fixed costs. You should be lowered down into turn to the variable cost. Yeah.
Interesting sharing. Okay. So how should then businesses best manage loans, right? You said traditional businesses, there's a tendency, of course, they would loan from the bank, or alternative financing sources. How should they best manage that? Because there are instances where I heard where business owners, because they have a lot of assets, right? High OPEX costs, like you mentioned, manpower and things like that. And then now COVID hits, right? So in order to sustain and still continuously pay their staff, they have to loan from the bank, right? But as they do so, and then they will try to quickly recover. But what will be your strategy, or how do you think businesses can best manage loans? Should they, when they loan up to a certain period of time, they should finish paying? Because your whole concept about you should collect money faster than you pay. But once you loan, it's like even negative, right? More negative, right? So what's your advice?
Okay, yeah. One thing I want to highlight is it doesn't mean you borrow from the bank is not right. Okay, but as a matter of fact, the borrowing cost is borrow money from the bank actually is cheaper than those money you raise from the VCs, from the PE. Okay, so when to answer your questions, when you're looking at the bank, when they raise money, borrow money, first is Singapore government during this COVID period, we have a lot of micro loans to come in. They can loan up to I think maybe 10 million. Okay, is as far as you have a more than 3 years track record, you in the business, you'll be able to raise funds. But now come back to the question again, say, oh yes, your government seek all the money, then the bank will be loosen up the terms and conditions to lend you the money. But one thing we need to look at as a business owner is you have to build up your credit history, and that means your credit rating along the way. Okay, this is very, very important. Why is because this one will affect your cost of a borrowing. In a way, it's an interest rate you're going to pay to the bank, right? This one, a lot of businessmen, they are not really care because in their minds, as far as I pay you, I'm okay. But to the bank, how do they measure you is whether you pay on time. Okay, the 2-day difference can affect a lot your credit rating, can from A to B. This is the first thing we need to talk. The second thing we will say we can manage the loan is you always a balance. That means we are talking about the capital management, capital structures. What is the ratios between your debt and the equities? The debt, it means the money you borrow from the bank, and the equity is your investors pumping the money into the companies. And I see traditionally people, yes, they use this one, but surprisingly, in the most of you can see those high tech, like say for example Ninja Van, right? Recently, they just raised about 279 million. But you're looking at their capital structures, they don't have a loan from the bank. They all from VC, from corporate, from even from the PE funds. But they don't have. So Actually, they should looking at, because we have the scale, right? Even though they make loss, but they have a coming, they have a revenue coming. They are in the loss position, but they will be able to generate, the cash flow to return the bank. But why they don't looking at that? One thing is because they don't have a profit. So when bank loan you money, right? They're looking at the two things: is your credit history and your ability to pay back. So in high-tech companies, they dare not to do that. But that's why the traditional industries, you should leverage on the bank, because you can as far as you can generate profit, you'll be able to borrow from the bank. Yeah. So this is the difference. It's traditional industry and high-tech industry. That's the difference. So different business in nature, you assess different class of the capitals. So to answer the question, just in short, you want to borrow money from the bank, just look for two things. You need to build up your credit histories, which is whatever loan you borrow, you pay on time. Okay. But second thing is, if you have a good credit history and credit ratings, then you see yourself whether you have the ability to pay back. So the amount of money you generated, whether you can pay back. Yeah, that's the two things you need to be looking at as a business owner.
Right.
Yeah.
So if you say that, so say for example, a high-tech startup, and during uncertain climate, and VCs and investors stop pumping in money or retract, and the banks do not loan them money, are they in a very risky position, especially for startups?
Yes, actually, a lot of startups, they have some of them. I think you can see the recently a lot of company actually be closed down. Okay. So they have different reasons to close down, but especially in this COVID period, when people don't come back and your bank, they don't have cash flows. So the only thing is you have to know how can you survive. But if you don't have someone to back up you, then your chance to survive is very, very low. Remember just now I say the three principles, the last one is how you accumulate the good class of the asset. The good class asset is not only for, we say the properties or something. Actually, the good class of asset is, first, do you have a customer, loyal customer? It means regardless whether your product is a good, so your customer willing to wait, right? So this is the thing, is a key for you to run, to sustain in the long term. And the second thing is an employee. Employees is we call the management asset. It's whether your employees at this tough times, they're willing to stand with you. They're willing to cut salary to say, okay, I know the business in a tougher time, but we can grow in the future. So say, no, never mind. Even you pay me lesser now, but I know I can stand with you and I can grow together with you. So all these things, if you are in place, then you have a chance to survive. But when the time is, you're in time in a tougher, right? Nobody wants to help you. So only you can help yourself. Yeah. So only you can sell. What can you do? You have to see what are the things in your hand, right? Whatever money you can collect, you collect back first. Whatever thing you can in your hand, you sell it first. And if let's say I cannot sell offline, can I go online? So you're looking for the online marketing, right? Have you seen recently a lot of people, they advertise, you see how they teach you how to do business over the online, right? Amazon or something. That is also one way for you to do it, because you cannot say I'm waiting for the time, the situation getting better. No, you must react fast. Yeah, that's the only key to do it. You don't care, you do what. If the business really bad, I close down first, then I do again. Also no problem. But you cannot just waiting for the situation getting better. That's not the way. Yeah.
So do you think that investors, including VCs, will change their tack or their tactic now to pivot in terms of their investment portfolio? Do you think they will change. You know, previously when you talk to a VC, they say, I only will invest in the top 1%, that 1% of the businesses which are not the profitable type, because the rest will be the SMEs who can be profitable, they can run sustainably, but they want something which is high growth, right? So they go for that 1%, but it's also extremely high risk. So do you think during this period, investors will change their tactic, or they'll stick to their same, you know, I mean, businesses change, right? They have to react fast, right? How would the investors react then?
Well, actually, investor depends, because recently I think I'm still doing the fundraising for one of my clients. Okay, this one purely depends whether I can say yes, the VC now getting more conservative, they are more careful. Okay, they also they're looking at the industries. If you're in the e-commerce industry, yes, still booming. If you're in the logistics industry, it's also a booming. But if you're telling people, say, oh, I'm doing blockchain, like say for example, but the blockchain is only in the finance. In some other sectors, they may not applicable. It's only idea. So now VC is, last time say, oh, the concept is good, right? I can, you know, everybody come to pump me the money. But now it's not. They're looking at the fundamental. So let's say for example, I take my recent case. Okay, this company is a technology company. Okay, they have very unique business models. So when we present this to the VCs, they are still talking to us. But some of VCs say, oh, this is it's not my the company is still early, so they will call back. But some of the VCs, if they see a business model is good and they believe the management is very key. Is management, you have very good track record, right? They are still invest. But if you say, oh, I have now today's I'm a youngsters, I have a certain ideas, I come out, can you give me some money? Now it's more difficult than last time, because not everybody to watch the money, the VCs, they become more cautious. Yeah, that's definitely. They definitely will change, but we still say again is when you run business, you always see the sectors. You know, where are you now? If you're working with, if your customers, your suppliers is in fact industry is growth industry. I say e-commerce, right? Because okay, we will see this COVID industry, COVID crisis. What kind of industries they were affected badly? Is those business you need a human touch, right? So, hospitalities, restaurants, even you know, offline education, all those they affected. But what are the business that are booming? E-commerce, right? E-logistic. All these people they are still coming. Why in this? You see, like in Japan, there is a fund is this special period of time. Why people still want to give them 279 million US dollars? Because this market is booming. They know there's future. Then the money is always, chase for the growth, chase for the opportunity. So doesn't mean this crisis is the end of the game. It's a beginning of the game. Just you make sure you're at the right track.
Yeah. I mean, talking about e-commerce, I've spoken with some of the business owners in this space. It seems that, you know, as it is booming, of course, there are many players, offline players who start to create their own e-commerce platform, or they start to go online to Lazada and all that. I mean, that is their reaction to this. However, because it's an extremely crowded space, when you say it's good, the next moment you will see lots of startups start to pitch to investors that they have an e-commerce platform. So, you know, end up it will be a tough one as well, because it's extremely crowded. It will only benefit the businesses that have existing brand equity, who has been there for quite some time, right? Do you think?
Yes. Yeah. Okay. When I say e-commerce is booming, in a way is okay. E-commerce, it can be a very, very unique. When people say your e-commerce, doesn't mean today because I cannot succeed here, so I quickly go. For example, if you are the restaurant, you have very good branding restaurant. Let's say, for example, we have a soup restaurant, right? Well, soup restaurant, even though they cannot serve you face to face, but they still can go online. Like my Mother's Day, my Mother's Day is a lunch. Is my children order the soup restaurant for me, right? So with this, what I refer to the online service is this kind of online service. You have a good branding here, but you cannot serve you by this face-to-face, but I can serve you online. I deliver to your house. But this is one opportunity. But if I say, oh, I'm ABC, nobody know, even though the day, normal days, before the COVID, nobody come to me. Then you say, oh, because the distance I cannot do, I go online. There's no way. You understand where I'm coming from? I'm not saying, oh, everybody go online, that's good. Because you must have something good to offer, then you go online. And the other way is online and offline, you must be integrate together. Yeah, you doesn't mean say if your neighbor can sell $5, you say I sell $2, but the $2, why people want to buy from you? Is you must have something unique. So that is your product design. So it's one of the good quality of the asset you need to build. Right. This is also we come back to fundamentals. When you run business, you must have something good to offer. Then one thing is you don't always copy other people's. If you tell your pitch, say today, I saw someone like Vinny, you do it very good. So I copy something like you. But there's never ever be, unless I be better than you, then I can stand out, right? But if you have nothing better to offer, I'm just a copycat and nobody care about you. That's the reality of life. Yes, you need to be unique, you need to act fast, and you provide better service. Yeah.
Right. We have a question here from an attendee, from Azizi.
Yes.
Is it preferable to change your capital strategy due to your company size or stage, or build a solid strategy and stuck to it all the time? Yeah.
Oh, sorry, say again. Is it good to change your capital strategy? What do you mean?
Due to your company size or stage, or build a solid strategy right at the beginning, and just I think that is his question. But Aziz, you can clarify. It's in the Q&A button. Can you see the Q&A?
Okay, wait. Okay.
So I think his question is, as you go along, due to your company size and stage.
Right, yeah. Yes, you have to change your capital strategy along the way. It's only when you change your capital structures, when your business growing bigger and bigger. But the fundamental is never changed. It's any business, right? Working capital is the key. Okay, why I say that is, working capital consists of three things. It's a receivable, which is the money the customer owe you, and the inventory and the supplier, which is payable, is that you own your supplier. So we refer back just now the question, the case study we just now say the Costco. Why they can succeed is because they have very effective inventory management. But in their retail industry, right, you manage your inventory is the key. So this one, don't forget, any industry, you have a certain things you must be fulfilled, and that is the core. All right. But when your business grow bigger and bigger, yes, your capital structure will change. You'll be initially more capital from your equities, then you become more debt you come in. Then you balance up your capital structure, your cost structures, your capital structures, which will lower down your cost of capital. Yes, I agree. Yes, you need all the way to change the structures when the business grows. Yeah.
I see. We also have one more question from Caroline Fong. Our question is how to strategize your business during COVID-19.
How to strategize? Okay, this is a very big question. Can I know which industry you're from?
Oh, she's in the coffee industry. So beverage, food and beverage, So she sells coffee, premium coffee. I think they manufacture in Malaysia. And she stayed.
So if she is first is your coffee is very we call lifestyle. Okay, coffee is a very lifestyle product. So if you just follow the traditional ways to say, oh, I have a cafe to sell, you're quite difficult to compete with Starbucks, right? But coffee is very lifestyle. So your key your emphasize is how you emphasize the experience. So when people come to drink the coffee, so when first you gotta build out your branding in a way is when people think of your brand, what kind of lifestyle they come to their mind. Is the key, I mean, the first thing you need to looking at is how you build up the feeling when people say, oh, if I drink your coffee, what kind of feeling I have? So it's user experience. Second thing is you give them the situation, where are they going to drink your coffee? Is it in the morning when they're fresh, or maybe when they meet their friend, they are drinking your coffee, or their girlfriend, or you need to come up the story behind in this age to coming to show your uniqueness of your coffee. And third one is you can expand your coffee is how you can make the coffee expand to like make coffee cake or something. It's become a community. So now you cannot just purely sell coffee. Actually, you need to build a community. Like last week, who are the Fabian said the omni marketing things. You have to know your customer very well because the taste has changed. So when you're looking at this is to enhance the data collection of your customers, see what their preference, so you can design, right, to design a certain unique product to meet their thing. So once the customer like, you know they're well, they'll become loyal to you. So you become a community, then you can get more people to come in. So then your business is not only I sell coffee, I'll become a lifestyle. Yeah.
Fantastic. All right. Any other questions here before we end off? Any other questions? Yeah. Okay, so let me summarize some of the key pointers that you mentioned here. Quite a number of good pointers that we should be learning from, right? You talk about acquiring good quality customers, right? Keeping loyal customers, and always think about selling faster than collect money faster than you pay, right?
Yes.
So
Yeah.
yeah, and you talk about traditional business models usually is to continuously generate that cash flow. And founder's job, if they are in a startup especially, is to fundraise every 2 years to cater to the business growth.
Yeah.
And how they should best manage loans is that, to have a good credit rating, you mentioned. Even if you're 1 day late, then, they kind of like, no, right? So that's great. And you talk about some business models like Ninja Van, in which they can't loan from the bank. So they're highly, reliant on investors' money.
Yeah.
Okay, always see employees as management assets as well. So they are assets to the business too. And right now, businesses should react fast and not wait. That is one very common thing that is in which I have also observed among SMEs. The moment COVID hits, right, many of them were thinking, okay, let me see how it goes. There were some of the activities that they used to want to do, they kind of halted. They stopped. They think, okay, maybe we just wait and see how long it will take, right? And then it got extended, right? So even until now, even people can go out to some extent. The rules are still pretty strict.
Yes,
so
correct.
In a way, it's still ongoing. I also do agree that businesses can't wait. It's either they pivot now or they find a way to boost their current brand equity at the moment, to increase their brand presence. When everyone's scared and you're doing something different and you are continuously doing it, you will be different, right? And management is key with good track record, where investors start to invest in the business. Currently you mentioned about e-commerce and logistics, which are doing well, but you are a believer of offline online. Same for me, big believer of omni-channel and offline online O2O strategies as well. You answered some of the questions about changing capital structure when you change the company structure or as you grow the business. So always continuously think beyond the product, right? So even if it's a coffee product you mentioned, think about how you can extend the use of coffee. Okay. In fact, right, Caroline, I brought her in because I've seen her product, right? Through a virtual networking, and she's based in Malaysia. And I said, okay, come join us for our next HER lifestyle show where she could do a dalgona coffee. So if you're wondering how to create dalgona coffee at home, you know, she will be teaching us how to do so. That's on the 13th of June, which is a Saturday.
Okay. All right.
Yeah. So I'm just going to share with you guys what's upcoming. So, you know, I know that, you know, many of you are saying, okay, we've been doing very business, very serious and business topics, any lifestyle topics, you know, so that, you know, you could feel happier, right? During non-office days. So we're done with the Q&A and networking segment. So what's upcoming next is this lifestyle show. And it's high tea with me, 13th of June, 3 to 4:30 p.m. And there are premium giveaways. All you just need to do is to go to our HER Entrepreneur site. You like us, you follow us, you tag 3 people, right? You're going to share this poster. So it's going to be up by today, this poster on our page. And you could share it and tag your friends, all right? And join us in this session. And we're going to have very interesting topics covered. You're going to learn how to formulate a natural DIY lipstick for yourself and using some of the very natural ingredients, and you could make it at home, right? So they're going to give away DIY lipstick kits, right? I think they've got several tones of the lipstick, and each kit is worth $108 if you win it. Okay, and some ebooks with the instruction. And Joyce will be joining us. She's one of the top 16 makeup artists in Singapore. I know some of you are going back to work, right? So what is a fast, free head turner makeup tip for you? So join us. And Caroline, as I mentioned, she'll be teaching you how to make impressive dalgona coffee that ignites your senses. I know you feel so sleepy if you stare at the computer the whole day. So how else to stay awake, right? So she's going to teach you that. And that is her product, right? One box of a premium 6-in-1 coffee worth 129 ringgit. Okay, so this is upcoming. And what's next on 17-18 June after that? The following week will be this event. So if you have not registered, do register today, right? A virtual #Asia Summit here. Okay, and for more information, do get in touch with us. This is our Telegram at #Asia. Follow our Facebook as well. And like our Facebook so you will receive updates following on. Okay. All right, so we've come to the end of today's session. Thank you all for joining us today. It's 1 o'clock sharp. Okay, so you have any questions, you can. If you don't have in a minute, then you know we'll close this session. Okay. All right, thank you so much for joining us, and thank you so much, Gail, for giving such great insights today. I think the attendees really learned a lot. so did I.
Thanks.
Yeah. Okay. All right. Thank you all, and I'll see you again on the next session. See you on the 13th and also on the 17th, 18th.
Yeah.
See you. Bye-bye.
Thank you. Bye-bye.